Good morning, everyone, and welcome back to this new edition of the Daily Analysis. As usual, let's start with a recap of yesterday's day, which basically, kept a little bit of the expectations of what had been, but what had been the day of, Monday. So, the market that continued on this bearish wave, on this bullish wave, at least to the stocks, confirming this good tone that there is at the moment. Last night there was the auction for the 2-year, U.S. Treasury bonds, which fortunately went well. So, let's say that the warning, that alert we had raised about yields that were, hovering around the 5% resistance, has eased a bit, but not completely. So it's still a situation to keep an eye on, but, certainly, in any case, it's a good sign that yesterday's 2-year auction went fairly well. Today, from a macroeconomic perspective, there aren't any data releases scheduled for early afternoon. Then there's the FOMC meeting tonight and, after the markets close, Nvidia's quarterly report will be released, the last of the big ones. After that, in about 15 days, the new buyback blackout period will begin, so it's a date to keep in mind because, obviously, buybacks will be suspended, since we'll be entering the new earnings season. So, pay close attention in about 10 to 15 days. I think the date should be around July 9th or 10th. So let's stay alert and keep an eye on this date. From an operational standpoint, let's obviously start by looking at the Nasdaq. Right now, we're working within the BC3 levels, basically hovering between the RD0 and SD0 levels. So, essentially, the day is moving calmly within this trading range, more or less around last night's closing prices. We'll see after the market opens if and how there will be enough strength to possibly break out of this trading range that has formed. Obviously here on the Nasdaq, as you can see, I've zoomed out the chart a bit. The area to get through, well, it's a tough one, really tough, is this whole area here around 25 to 2050, which I think is pretty hard to break through because it represents a whole zone of highs that's been tested and rejected several times, so there's definitely going to be a battle here. On the downside, we're obviously keeping an eye on the lower part of this range that's formed, because it seems like the first available support, and we're already working around it. As you can see, we're sitting right on top of it right now. So, if this level were to break, it could easily bring prices back down to the 21,340, 21,360 area to, let's say, retest the upper part of these highs. So, let's move on now to the Standard & Poor's. Here it is. The situation is more or less similar. We're sitting on the lower part of this trading range that's formed, so let's keep an eye on it. On the downside, of course, a break of this range could easily bring prices back to retest this whole area here around 5,890 to 5,9, obviously. On the upside, let's keep an eye on this because, as I was saying, the situation is similar. The area of highs to break through for ES is around 5,980 to 6,000. Basically, that's the area, the most important and significant resistance. Of course, now let's also take a look at the other two American futures, starting with the Dow Jones. Here it comes. The situation is similar, although as you can see here, it has already broken a bit out of the BC3 level range, and it's working on it, sitting right on SD0. So, if this level breaks, prices could move into SD1, which covers the whole area of these highs here that stopped Tuesday's rally. However, it's an area that didn't see a lot of volume, so in my opinion, there's a good chance it could be broken through pretty easily, and then we could go on to test more significant areas, which are 42, the area of 41,900 to 42,000, basically this area here. On the upside, we obviously need to keep an eye on these highs here because, as you can see, this whole area used to act as support for upward attempts at first, and now it's clearly acting as resistance. So, we might just stay within this trading range and go back to test the upside again. If we break through, that could easily bring prices back up to the 42,800, 42,900, or even 43,000 area, especially if there's a bit of momentum and some volume behind the move. On the downside, of course, we're keeping an eye on these levels right here, the ones I'm showing you with the mouse. That's 42.2, 42.3. I think these are the supports we absolutely need to hold, because otherwise, well, we'll definitely end up testing those areas I mentioned earlier. Let's move on to the Russell. Here it comes. Here it is. The situation is more or less similar to the Dow Jones. It's trading again below 2,100, so the area to watch right now is 2080. Basically, this whole area here needs to hold 2070, 2080. A test here is possible because, well, even yesterday's rally was definitely strong and directional, but in my opinion, it didn't really have particularly high volumes to support a move of this magnitude. So, honestly, it seems to me, I think this move is a bit vulnerable because the volumes didn't really back it up decisively. Still, we definitely have to acknowledge that the market right now has a positive attitude, and we need to adapt to that. As we were saying about the Russell, on the downside we're keeping an eye on 2080, which seems pretty clear to me. It's represented here by this whole area that has acted as support for now, then became resistance, and then there was this breakout. A retest from above could be a signal to start moving up again, or, if there's a break below, prices could easily drop back to around 2050. On the upside, obviously, a break above 2,100 MMMC could also set the stage for a test of the highs reached at the beginning, well, around the middle of May, which should be around 2,130 or 2,140. Okay, let's move on to the DAX, which continues to rack up new all-time highs. Even yesterday, it hit new record highs. However, in this area, it has basically formed a triple pattern, or rather, a double top, which for now has broken downward. Yesterday I suggested a trade, actually recommended by a friend of mine who is an options trader on the DAX. It's still posted there in the chat, with an expiration date of June 20th. You can do this trade at zero cost, but of course, the broker will require a margin, which should be, well, for me, it was about 7,000. My broker asked me for about 7,500 euros to finance this trade, which, I repeat, is at zero cost. Okay, with that short, well, that brief aside out of the way, from an operational point of view, as we were saying, after the market opened and hit this new high, which we can consider a false breakout, and then dropped back into the range, it moved downward. So, we might also expect another test lower, around the 24,000 area again, because even here on the DAX, this whole upward movement was indeed directional and well structured, but, I repeat, it wasn't accompanied by particularly high volumes. So let's keep an eye on these movements because they could be a bit vulnerable, kind of like a giant with feet of clay. As we were saying, on the downside, let's monitor this area here where it just recently bounced, which will then represent the area of the previous highs. So, a return into this range here could bring prices down to test 24,000 at first, but also lower to 23.9, or even, why not, 23.8. Perfect. Let's move on to oil, of course. Here it comes. Here it is. Yesterday, well, it pulled back a little bit. Basically, it went back to retest the area around 60.30, 60.20 that we looked at yesterday morning, and then it started moving up again. Now he is working on it. He is working around the 61.10 area, right in the center more or less of this range that was created previously, but you see how 61.50 is still an important obstacle, so let's monitor it because it could develop a 3-year range with attacks on the upper part of 61.50 with projections that could then bring the prices back to the 62.20, 62.50 area, or in short a breakdown of the 60-61 and 20, 60, and 90, 90, 95 area could easily bring the prices back to a test of these three of this triple little man in short that has already been tested several times. Then in short here a break could give rise to rather sharp movements to the downside. We'll see what happens. Well, let's look at gold, which yesterday bounced once again on the very important support that we have highlighted several times in this deal analysis, which is 3,002.80. Even yesterday, it stopped here, bounced several times, and then this morning it really took off. Now it's at 3,320, and it's coming back up to retest this whole area from below, which previously acted as support and now, well, is acting as resistance around 3,320, 3,330. So, breaking through this area could easily bring prices back up to around 3,350 to retest this previous high area here. On the downside, of course, we're keeping an eye on 315, basically the BC3 level area, because in my opinion, if it drops back into the BC3 levels, prices will once again test the 3,280 area. Okay, so let's look at the SPX. Yesterday it also made a nice upward move, as we can see here, really strong and clear. It's basically re-entered that upward trend we've been building. We'll see how it develops, but honestly, I need to adjust the chart a bit. I just haven't had the time to do it yet, to be completely honest. But anyway, for SPX as well, the levels to watch are 5,980 on the upside, and on the downside, a new break below 5,840 or 5,830 in my opinion wouldn't be a good sign, because it could bring prices back to retest the lows we saw last Thursday, and possibly even lower. Let's see, then, what developments might unfold. Let's also finally take a look at Bitcoin, which yesterday had a pretty much sideways day. We can see here that it's basically moving within a trading range this morning between RD0 and SD0. Let's keep an eye on it, because a break of 108.5 could easily lead prices to retest this whole area of lows here, around 106.6, more or less. You can see how wide this area is, so this is definitely the primary support. On the upside, let's watch for a possible breakout of this PV that formed on this, let's say, nice reversal pattern as described in the book. This is called a double B top, okay? So right now it's trading below the PV. A break above the PV would mean invalidating this pattern, and that could push prices back up to the 110 area, so 110,700, which is the area of the highs. Obviously, if this level holds, this sideways movement could then set the stage for a strong downward move. Perfect. As usual, we've reached the end of this daily analysis. Please pay close attention to all the news that might come out today after the market closes and throughout the day, especially regarding the tariff issue. As always, I invite you to leave a like on the video, follow me on social media, and we'll catch up later in the chat. Thank you all for your attention.